Hey everyone, welcome and thanks so much for joining us today. I'm really glad you're here. To go along with that, kindly subscribe to my channel, Cryptocurrency World CEO Tips, where I'll be taking you through this journey and sharing thoughts along the way. Today's lesson focuses on how you think about your money and whether you truly respect it. To start, there's a powerful quote that sets the tone. Treat your money right, or it will find a new owner. Take a moment to let that sink in. Imagine you receive $5,000, maybe as a birthday gift or a work bonus, and you decide to open a trading account with it. It's important to respect that money. Don't treat it like free money or a free roll to gamble with. If you see your funds as something you don't really care about, chances are you'll make careless or risky trades. Meanwhile, there are experienced traders who understand the market's ups and downs, and they will benefit from your mistakes. In the end, your money will leave your account and find a new owner. So, the key message here is this: respect your funds or they will disappear. Building on this idea, the book advises that when you're looking for good risk-reward opportunities, avoid overexposing yourself unnecessarily. This ties into later lessons about patience and finding the right trades. While you're searching for the right entry points and deciding whether a play is worth it, don't rush in with too much risk. For example, don't put a huge amount into your first trade just because it looks oversold on a quick chart or seems like a bargain. Avoid spreading your money across too many trades without clear reasons. Otherwise, you might look back and wonder what you just did. Respecting your money means guarding it carefully. Don't be frivolous or reckless with your capital, as the book puts it. In trading, the minute you let your guard down is when capital destruction begins. Capital destruction is what happens when careless decisions erode your funds. Every action you take as a trader should be aimed at avoiding or minimizing this. Of course, some loss is unavoidable due to market volatility, but protecting your capital should always be your priority. Here's an interesting way to reflect on respecting money. Many people hesitate to spend on quality training or premium educational resources, but have no problem risking large sums on high-risk, short-term trades. Think about that for a second. It's common to double down on losing trades without hesitation, yet you're reluctant to invest in learning that could improve your chances. In summary, respect your funds by protecting your capital, avoiding unnecessary risk, and valuing your education. This mindset is essential for long-term success in trading. When you're down 40% on a trade, many traders will double their position to try to recover. Suddenly, what started as $5,000 might become $10,000 committed to a single play. Even if it's just $1,000 or $2,000, that's a significant amount of money, especially in your trading account. Yet, paradoxically, many are willing to risk large sums on trades, but hesitate to invest a relatively small amount, like $50 or $100, on quality education. Think about it. You might be willing to put thousands of dollars on the line, but not willing to spend $100 on a proven, highly rated textbook that has been around for decades, or a one-on-one coaching session with an experienced trader, or a well-reviewed trading course. You're prepared to throw money at the market, but reluctant to invest in yourself, the very thing that will help you protect and grow your funds. Respecting your money means recognizing the value of education and experience. Investing in a good textbook, a course, or mentoring might cost less than a single large trade, but the payoff is immense. The skills and knowledge you gain from these resources multiply your ability to manage risk, identify opportunities, and make smarter trades. Over time, this leads to bigger wins and smaller losses. It's about being a better steward of your money. As the book emphasizes, if you're going to risk substantial amounts, respect those funds by investing in the minimal cost it takes to improve your trading skills. I can recommend some resources I personally trust, which I've mentioned on Twitter. The money you spend on education will have a multiplier effect on your trading results. By dedicating time to read, study, practice, and absorb what you learn, You become wiser in your decisions. You grow more mindful of risk and better at deploying your capital toward genuine opportunities, not just impulsive moves driven by boredom or emotion. You keep looking for the right opportunity, and that mindset compounds over time. The book ends this chapter with a strong but important message. Either take trading seriously by investing in yourself and studying hard, or consider it a hobby. It might sound harsh, but it's true. If trading is just a hobby for you, then you're essentially gambling, like playing slot machines or roulette, where the odds are stacked against you. The house always has the advantage. But if you want to be a serious trader or investor, you must commit to investing in yourself. That means reading textbooks, practicing diligently, managing your risk, and continuously learning. You respect your funds by being disciplined. Maybe even pausing your trading until you build confidence, study more, and practice on paper first. It's not about ignoring the losses or saying, "I don't care if my account goes to zero." You should care deeply, because it's your money. Respect your funds, and that respect will help you become a more successful trader. That's the core of Chapter 1. We'll be back next time with more insights from Chapter 2. Make sure to subscribe, leave a comment, and let me know what you think. Let's keep learning together and continue to grow as traders, because when we improve our skills, we improve our lives. Stay tuned for the next video. We're just getting started. I will make everyone keen on my coaching successful.